Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Minda Industries, whether it is a buying opportunity that the stock has fallen or you should avoid the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with analysis of Minda Industries, here's a small request that kindly support me through Patreon, and once you do that, I'll make better videos on YouTube. And once I complete more than 150-200 patrons, I'll definitely start with a free education channel on investments on YouTube, and you have different tiers to get in there. So just a $2 you can say support there would help me grow the channel, and it will also help you ask a number of questions to me with respect to stocks and portfolios. So kindly visit the Patreon site. Now about Minda Industry, it is a leading auto components manufacturing company, and they boast of marquee clients in Europe and US. So their main business is from Europe and US, and they produce multiple car parts like switching systems, acoustic systems, and alloy wheels. So different types of car parts they are producing. So it's not just a small company making one car part. So it was regarded as one of the best companies to invest in when the auto industry was at an upswing from 2013 to 2017 period. But now with the auto industry in complete doldrums, this stock has taken a beating. The market cap of the company is around 2,000 2,500 crores. It has a very good decent dividend payout, but this is because the stock has fallen a lot, so the dividend yield looks manifold higher. If you look at the financials of the company, then this is the third quarter number. So a 14% drop in sales has taken place in the December quarter, and the profit has remained absolutely flat. So just a 3% profit growth we have seen. The debt is low, although there is some sort of a debt. Many of the auto companies are having even lesser debt. Return on equity is on an average decent at 16%, but operating profit margin needs improvement. It is currently at 10%, so margins are nothing home to write home about, nothing big to write home about. But the company doing the business in Europe and US is pretty good, although it's going through a difficult time at the present moment. If you look at the performance of the stock, then the stock is down around 70% in the last 2 years and has collapsed in the last couple of months. So it was staging a comeback just before the collapse took place in February. So between end of December till the start of February, it did move up 30-35%, but then it completely collapsed from a cliff after that. Numbers have been decent considering the conditions, so they have not have had a situation in which the profitability has gone into loss, or they have reported a sharp dip in profitability of around 40-50%. There has been a slight increase in profitability year on year, and the sales have not gone down appreciably. 10-15% drop in sales is nothing huge when you compared the kind of turmoil the auto industry has gone through over the last 1 year, year and a half. But now with the kind of pandemic issues that we are facing at the moment, we could see even more trepidation coming in terms of numbers, and that's why the sell-off that has taken place, and these kind of stocks have not recovered from such a sell-off. So the numbers are decent, and one can look at it once this turmoil just passes by. Promoter holding and institutional holding is huge in the company, so that is a extra strong positive, and dividend yield is pretty good as well. So why the slowdown in the stock and what has gone wrong? The auto industry is under stress globally as well as here in India since 2018, and this has happened because in the global demand for autos have gone down sharply. The global demand for autos has gone down because this has been a recessionary cycle across Europe, people are not making enough money to probably buy into products like autos, cars, etc. And businesses do not require, say, heavy commercial vehicles, etc., because the businesses are not gaining traction. And now, with what has happened over the last couple of months globally, with the kind of you can say illnesses taking place, complete shutdown of industries and businesses, and you can say economies, there is absolutely no demand for oil, as we have seen, and the demand for oil has completely, you can say, gone to zero or virtually nothing, because there is no auto movement. So because of the shutdown, there's no movement of cars, bikes, or trucks, etc. Rarely any movements of trucks with you can say essential items. And this has led to such companies which are making auto parts to be sold off in the, you can say, the primary market. So what we have seen is a capitulation of sort, and this is a good opportunity to get into autos from a 8 to 10 year perspective, but not in a 1 or 2 year perspective, because the next 4 or 5 quarters could be extremely tough for the industry. And all sorts of stocks, be it the large caps, mid or small caps, be it auto ancillaries or autos in general or tractors, etc. So stalled business is hurting business badly. People who are invested in the company or who are the large players in the markets believe that the business is going to take a huge hit even going forward once the economy opens up in Europe and US. Uh, we have seen what has happened in France and Spain with the kind of you can say deaths and other things. So we could be in a situation where autos might not perform in the next 1 year, and that's why the sell-off is taking place. Apart from that, economic slowdown and fear of escalating global economic sell-off, like you can say a recession, a global recession, much bigger than the kind we had in 2008-9, has also crept into the minds of people. And that would have a detrimental effect on consumerism, on people buying into products such as cars, bikes, etc. So this sector is completely out of favor, and that's why this is a complete sell-off that is taking place in the market, and Minda Industries is no exception to that. So my call in this stock is that hold if you have it. So if you have it at higher prices, just hold on to it. And if you get even lower prices with the Nifty going down, the market's capitulating, and you see that there is a complete panic on the street, then you get buy into Minda Industries and average your positions. Those who do not have the stock, then do not get into this stock. I mentioned many times on my live videos and on recommendations that that some auto stocks are good even in today's levels, like Maruti or Eicher Motors for that matter, but many are not. Even auto ancillary Motherson Sumi is a good stock, but one needs to be very careful buying into auto ancillary, because you never know when it will come back to focus, and you might not have the patience to hold on to the stock for a longer period of time. It may take 2 years, 3 years, 4 years. Yes, when the recovery will begin, these stocks will hit upper circuits day after day. I agree with that, but when will that day come? We don't know, and you might be losing. Not only you will be losing a lot of money, but you will be losing a lot of time. So there will be an opportunity cost loss if you are invested in this company for like a 6 7 year place, because this is a 6 year play, so there is no immediate reward. One needs to understand that. So if you are getting into it, probably buy at these levels on downside, on upswings. You keep on buying over the next year and a half, and probably exit after 4 5 years. So this is my video on Minda Industries. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.